Welcome to Talking Property. Today, SQM Researchers Louis Christopher and myself are going to preview the 2024 Sydney property market. Louis, thanks for joining us as always.
Nice to be with you once again, Peter.
Straight up, Louis, what is your base case for 2024, please?
Okay, it's more conservative this year. So the forecast for our base case nationwide is that prices will change somewhere between -1% to about +3%.
Very subdued compared to last year.
Absolutely, it is. We have elevated concerns surrounding current interest rate settings. We have concerns about the economy now slowing down, and we do believe that we've reached the peak in terms of net overseas arrivals.
Yeah, I know, and correct me if I'm wrong here, I don't want to put words in your mouth. Your base case was on the premise that the government would tone down immigration. When I look at scenario 1 here and scenario 3, they're closely aligned. My question to you today, is there a chance that the government come out with some grandiose statement that they hear the people on too much immigration and that we're going to tone the numbers down, but when it's all said and done, the borders stay as porous as they were throughout 2023?
Yes, the Clayton's announcement.
Yes.
Yeah, I think it's a real risk they'll do that because we're well aware that federal Labor has their left faction, their right faction, and there are a lot of forces playing out there, and this is a very topical issue and a heated issue, I believe, within the Labor Party. So it will be interesting to see exactly how it plays out, but in all this, we do believe that there will be a natural peak in migration numbers, driven by potentially less overseas students coming into Australia and perhaps a little bit more of an exodus of university students finishing up and going back home. So I must say though that our forecast number is for migration to fall somewhere back to about 460,000. Now, if we are correct about that, that's still a pretty strong result. And it will still mean that we'll have rental issues with vacancy rates still hovering around circa 1%, maybe up to 1.3, 1.4%. So the impact would be more on the for sale side in our view.
Just on that point that we're going to continue to have rental issues, I agree. I don't think the rental crisis has peaked. Indeed, I wouldn't even say it was a rental crisis at the end of 2022, but I do accept by the end of 2023, we were in a full rental crisis by that stage, weren't we?
Absolutely, we were. So rental vacancy rates in our largest capital cities and many regions actually fell, and they started falling again after a little bit of a reprieve in the first few months of 23. They started falling again from mid-year.
Yeah, indeed. So my question to you, Louis, on that point, one gets the feeling there's going to be very spirited debate in Sydney particular between the state government and local councils, because the new New South Wales Labor government are really determined to get extra supply in the inner city happening, and they feel that they have a mandate for that. But by and large, local councils don't want anything to do with it.
Oh, you're just spot on. And so when we consider that issue, let's be right up front here. Even if there was resolution between the state and local councils today, we still wouldn't see an increase in supply for another 2 years from now. So in terms of our 24 forecasts, our total estimate for dwelling completions is coming in around 153,000, which is about 25,000 less than what we have for 23.
So the supply is locked for the year, no matter what really on mass, what happens from here.
It's unlikely to change. If anything, we might see an improvement in cancellation rates, and that might mean an extra 5,000 or 10,000 dwellings completed if that does occur, but it's not as though we'll be back up to, say, 240,000 dwellings completed, which is Labor's vision for the next 5 years in terms of hitting 1.2 million dwellings built nationwide.
Let's cut across to inflation. In late 2023, the inflation rate got down to 4.9% from peaking at 7?
It peaked, if I recall, at about 8.
About 8, okay, that high. So it peaked at 8, it's down to 4.9% in late 2023, which the market celebrated because they were braced for a reading of 5.2%.
Yes.
But, big but, the RBA's target rate is 2 to 3%.
Yes.
is the RBA going to win the inflation battle in 2024? Are we going to see the inflation rate hit 2 to 3%?
I think we will see a significant improvement in the CPI. We're already starting to see it overseas, and I think that will be imported to Australia. So we believe when we get to this time next year, we're likely to see inflation rates coming in the threes.
Okay.
So they might not hit 2 to 3, but it may well be just above 3. And that should give some comfort to the RBA, possibly to the point where they can cut interest rates towards the end of 2024.
So you're feeling that the RBA could cut interest rates above their target rate?
Yes, they could. The reason why it goes back to real interest rate settings.
Yes.
Okay, so with a current cash rate running at 4.35%, if you see the inflation rate run below 4%, you're running a real positive rate, which is highly restrictive upon the economy.
Okay, yes.
So they could cut, even if they haven't hit the 2 to 3% range. I think they'll have a lot of language surrounding that saying we strongly believe inflation is now coming back to 2 to 3%. The economy is slowing. We're seeing a rise in unemployment. We'd like to provide a little bit of stimulus out there.
The terminal rate, when we talk interest rates, is the rate at which the current interest rate setting is driving rates down in and of itself and doesn't need to be increased again, yeah?
Yeah.
Are we at the terminal rate in Australia, or are the RBA going to have to take the market on again?
That's data dependent. Okay,
Yeah.
so good news is that we've had some recent data to suggest inflation is definitely slowing and potentially slowing quicker than what the RBA forecasted. So that may well mean we're at the terminal rate now. The RBA, though, made it very clear in their last statement that they believe inflation in Australia has been more demand-driven. Now, I think when we see some more information coming out from the RBA, which I think we'll see in later January and into February, that we will see some noise from them saying that they're starting to be more comfortable with the situation.
Still on the RBA have made it known that they want to see unemployment rise.
Yeah.
Can unemployment increase and property markets hold or even rise?
It depends to what they increase to. If they were just to increase from, say, 3.75% to, say, 4.25%, I don't think that would have a major bearing on the housing market. If we were to start to see unemployment trend upwards above 5%, I think you would see an impact upon the market, because you would see a rise in forced selling activity and you would see a lot less qualified buyers out there.
The biggest non-issue in the property market in 2023 turned out to be the mortgage cliff.
That's right.
Will the mortgage cliff return as an issue in 2024 or has it been cleared?
Only if we see an aggressive rise in the unemployment rate, then it will become an issue, in my opinion. But we have actually passed the peak now in fixed mortgage rate resets. There's still a lot of resets occurring, but we've now passed. The peak was roughly at about August 2023. So we've passed that peak. So far, so good. We've only a minor rise in distressed selling activity from what we can see. So overall, the economy's done better than expected. Borrowers have done better than expected. And so long as the economy doesn't tank, that should continue on.
I did see a slide that you produced recently. I'll try and bring it up here. There it is. And it talks about Australians living off their savings.
Oh, yes.
Something that you don't feel can go on indefinitely for obvious reasons.
Yeah, that's right.
So we're compensating for the higher interest rates by drawing on savings we otherwise wouldn't have, but you say that's got a limit.
That's right. So as we can see, during the COVID years, with all the economic stimulus that we had, Australians saved up quite substantially over that time. But given the rise in interest rates and given the turn back of that stimulus, for lack of better words, Australians have been drawing down on those savings. And as you've rightly said, that can only go so far. What happens then is that people cut their spending. And indeed, we've seen a slowdown in retail spending. And I believe that will continue on into 2024.
And that's music to the RBA's ears to that one.
Well, it creates a slowdown in the economy,
Yeah.
which should see a rise in the unemployment rate, or certainly a slowdown in the employment growth, which is what the RBA's objectives are.
Louis, real estate agents that I speak to report that existing landlords are selling out and have been steadily for the last 18 months.
Yes.
And they're not being replaced by buy and hold investors. If I can bring up your excellent slide here about gross yields.
Oh, yes, yes.
If you just want to walk us through what's happening here, please, Louis.
Yes, so for the period through to 21, gross rental yields were higher than the average lending rate. And by the way, the red line is the investment lending rate, not owner-occupier lending rate, so generally a little bit higher. But this was very conducive for property investing to have this situation. And it also explains why negative gearing receipts effectively weren't that particularly high over this period, okay? Because there were actually quite a few cash flow positive properties out there. But with the rise in interest rates, we've got the situation now where the lending rate is higher than the gross rental yield, even though gross rental yields have risen thanks to an acceleration in rents. This is a situation where this would be deterring property investors from entering into the market somewhat, notwithstanding the rise in rents. And let's also consider too that, okay, negative gearing now kicks in. So we should be seeing more negative gearing deductions being claimed.
This helps explain the rental crisis as well in another way, doesn't it? You can see quite clearly the way lending costs, mortgage rates have gone for investors.
Yes.
Why they've felt the need
Yes.
to try and claw some of that back
Yes.
through higher rents.
And also to move towards short-term leasing properties, which has definitely happened over the course of 21 and 22.
Now, Louis, the market requires incoming investors, property investors, to help supply the rental market.
Yes.
Why is it that you feel property investors are so demonised in society, where people that trade in the share market or in collectibles or antiques or index funds are not subjected to the same criticism that property investors often are by the commentary?
Well, good question. I mean, look, housing and rental properties has always been an emotional thing here. We're talking about tenants' rights versus landlords' rights. And there's often a clash between the two. There always has been. Of late, with the rental crisis, there's been more angst with tenancy groups and some political parties about the rights of tenants shrinking. But really it's been more about the rental shortage. My concern has been in all this is that if we hit the hammer over landlords, we will see even greater shortages going forward. As you rightly say, whether we like it or not, we live in a market economy and we need to provide incentives for property investors to come in and basically invest in new property to help increase supply. That's one thing I certainly do believe in.
So let's talk about, you're talking about incentives for property investors to come in, and one side of the debate is the negative gearing. It favours people that are in property, which I accept as being partly true. But there's a lot of disincentives for investors at the moment. I think that goes a long way to explain why they're not partaking in the market the way we need. When it comes to housing, investors are crippled by land tax every year.
Yes.
We regularly see through our rent roll landlords who don't actually keep a dollar of rental income from January out to April because they've got to pay a massive land tax bill.
Yes.
And those that are not in housing and are in apartments are paying big strata levies in many cases.
Yes.
Whether it be for increased insurance costs in the strata or gyms, lifts and pools and amenities that they don't use. So the investors do what any money flow does when it doesn't work for them. It stays on the sidelines or finds other avenues. So my question to you here is that the state government of, in fairness, Dominic Perrottet had a go at fixing the land tax issue, but a state government's sort of cooking the goose that lays the golden eggs with the way they overtax and overregulate investors in the property market.
Yeah, look, I would agree with that that notion for sure. You have higher holding costs in the form of taxation, you have high transaction costs in the form of bracket creep on stamp duty. That's going to deter investor activity. That will mean that we'll see less properties being built over the future, and we'll see once again a move towards existing property owners finding a way to get more income from their property, and that means ultimately potentially leasing in the short-term market.
Yeah, indeed. And, you know, they're throwing, not that it's a market-based issue, but they're throwing regulation over the top of property managers and landlords where you must accept pets and coming up with all sorts of rules here which make investing in property less desirable at a time we need them more than ever.
Yes, that is correct. Now, I am a believer in some fundamental tenancy rights, of course, and sadly you have some very unscrupulous landlords out there who do not play fair. No question, but there needs to be more balance. There's no question about that, and potentially the pendulum's just swung a little bit the other way to the point where landlords are looking at the numbers and they're saying this isn't working and they're walking away, or as mentioned, they wish to lease their property out via Airbnb or stays.
Yeah, and I think that comes back to the primary point we're making here, is more landlords are selling out than are buying in.
That's right.
And it has been the case for a few years ago,
which
years
fundamentally
now.
Reduces the stock of rental properties available.
Making it ultimately worse for the tenant.
Yes, that's right.
Yeah. Louis, in 2023, the premium end, the prestige end of the market was clearly the strongest performer.
Yes.
It seemed like it was easier to sell a house for 10 million than an apartment for $1 million.
That's right.
Bizarre, but there you go.
Yeah.
Segmenting the Sydney property market in 2024, what do you think is going to be the best performers?
Provided the economy holds and doesn't slow down too aggressively, we will see the top end continue on. I say that because the top end of the market is driven by cash buyers predominantly, whereas the market within, say, the 1 million to about 3 million mark are actually driven by borrowers. And with the rise in interest rates, our expectation is that borrowers will find it harder to actually come into the marketplace. So demand should fall away in that segment. Hence the reason why for Sydney itself, we're a little bit more negative on freestanding houses for properties between 1 and 3 million. We believe units are actually going to outperform. When I say units, I mean established units, and especially units under $1 million. Because
so you're saying there, don't rush out and buy off the plan and blame Louis. No,
no. But yeah, so we're expecting units to do better. What we've been noticing in more recent cycles is that during downturns, units have been outperforming, and during upturns, units have been underperforming.
Very interesting. Great points there. Just coming back to the prestige end of the market set to outperform again in 2024.
Yes.
If there is one thing that's really unhealthy that we've seen in Australian society in the last few years, it is that the wealthier seem to be getting wealthier, and the mainstream seem to be falling further behind.
Yes.
How do governments sort of fix this widening wealth gap that's occurring in our society?
So it's got to be done, in my view, by rapidly increasing supply in a similar way that we did in the 1950s, 1960s and earlier 1970s. So you get a good supply side response that creates more affordable housing. At the same time, I believe we need caps on migration. So I think that would help the situation as well. But in all said and done, the reality is that as an economy becomes more prosperous, you're going to find properties which are in the greatest demand, and let's face it, that's your very top end, affluent properties, harbourside properties, will continue to remain in demand and will continue to be very rare properties, hence the reason why they sell for absolute top dollar. No amount of supply is going to change that.
We know that there is a lot of money and cash around at the top end, but there was a noticeable increase in offshore buying in 2023 as well, foreign buyers and a bit of expat buying coming back home. Have we got some sense of the role that foreign investment played in the market rally of 2023?
Well, sadly, the data which comes from the Foreign Investment Review Board is seriously lagging. So we cannot confirm through formal data We know the numbers for 2022 did show a little bit of a pickup. I suspect 2023 will show a significant pickup, and I think the numbers will be higher again in 24.
Yeah, because we're relying on anecdotal evidence agents talking about what they're experiencing on the ground. As you say,
and we've got to be careful of hearsay.
Yes.
You know, and sometimes it's hard to basically identify if someone's a foreign investor versus a third or fourth generation local.
There's some pretty wild stories out there about offshore buyers paying cash and outbidding the local crowd, though, wasn't there?
Yeah, there has been stories about that, and I recall similar stories back in 2013 as well, and then back in 2005. So these do come along. I do think it does happen. Let's keep in mind that there are rules in place. Sadly, some of these rules you can get around.
Yes.
No question about that. But as a percentage of the overall market, I still think it's a relatively small percentage in terms of foreign investors breaking the rules.
Coming back to infrastructure in Sydney, which obviously the WestConnex had a pretty rough start.
Yes.
It was infrastructure that was hoped would redefine many things in the city.
Yes.
The Sydney Airport, the Western Sydney Airport, I should say, is close to completion.
Yes.
Massive infrastructure happening in Western Sydney.
Yes.
What do you see that doing to residential property markets in that part of the world?
History has shown us that when we've completed major infrastructure projects in Sydney, that there's been a benefit for those suburbs nearby. So back in the early 90s when we completed the M2, all those suburbs in that area outperformed the Sydney-wide average for the next 10 years. So I wouldn't be surprised to see outperforming locations in the West benefiting from indirect employment growth, from people wishing to live closer to a greater amenities and facilities there, notwithstanding localities which are right under the flight corridor.
And millions of people now live west of Parramatta.
Yes.
And when they need to head overseas or interstate, they're heading through the city into Mascot.
Yes.
Where they can head west to Badgerys Creek to get a flight now. So you would suspect that will hopefully ease traffic movement around the city. Is that going to give some value capture to inner parts of the city that are used to airport rat runs?
I think it will to an extent.
Yeah.
That said, though, if the city keeps growing at, say, 2 to 3% per annum in terms of population expansion, that benefit will go pretty quick.
So all this infrastructure, as we saw, the tunnels in WestConnex were full on week one.
Yeah.
Not only due to poor signage, but too many people.
Yeah.
So that's the risk for governments, is they fill the place up as quickly as they build infrastructure, so there's no net benefit for the locals.
Correct, and it's happened in the past.
Yeah.
Yeah.
Louis, that's an interesting and terrific forecast on what's happening in 2024, and we look forward to catching up mid-year to review everything.
Thank you, Peter.
Thanks for joining us today. And thank you for joining us on Talking Property, and we look forward to catching up with you next time.